The Indian stock exchanges, the so-called traditional platform businesses, are back in limelight, and one of the reasons is the recent IIFL deal to sell 31 lakh shares of National Stock Exchange at a floor price of 2800 rupees per share. That suggests that the exchange is now valued at over 1.38 lakh crores, which is nearly 3 times returns only in the last 1 year. The P multiple uptick from FY19 to FY21 can be a good way to show the current interest, coupled with the fact that 2 of the remaining 3 exchanges, that is MCX and IEX, are now getting added to the futures and options segment. Each of the exchanges have something as a USP. So look at the Bombay Stock Exchange first. The BSE is the Asia's oldest stock exchange, established way back in 1875. While BSE has lost out to rival NSE in terms of derivative volumes, investor focus has been on the cash it holds and the potential value unlocking in its subsidiary businesses, which is CDSL and Star MF. The other big trigger for BSE is whenever NSE gets listed, it has to be on the Bombay Stock Exchange, which is BSE. So that's the trigger to watch out for. Okay, now look at the youngest stock exchange, which is IEX. IEX got publicly listed in 2017, and even IEX enjoys a virtual monopoly as it accounts for 95% of the short-term electricity contracts which are traded on the exchanges. The next big trigger for IEX is that the gas producers can sell gas on the exchange via exchanges, and power generators can now divert power on exchanges in case of defaults from SEBs. This can provide a further fillip as far as volumes are concerned on the IEX. Now look at the third exchange, which is the multi-commodity exchange. The exchange commands a 96% market share in the commodity volumes in India, and among the prominent shareholders of MCX, Kotak Mahindra Bank owns 15% stake, and Big Bull Rakesh Jhunjhunwala has been holding 5% stake for a very long time in MCX. Now look at the valuations. If you look at the valuations on FY22 earnings, the most expensive is IEX, trading at 51 times FY22 PE, whereas NSE would be trading at 31 times, BSE is at 26 times, and MCX around 30 odd times. But if you compare this with the global stock exchanges, they range between 22 times to 45 times, and the average mean would work around 32 times. So compared to the global peers, Indian stock exchanges are a bit expensive in terms of valuations, but what excites the investors is probably the kind of growth that Indian exchanges are going to see, and hence a lot of investors are betting on Indian stock exchanges.